everybody. Welcome to 2 Minutes with Todd. My name is Todd Jones. I'm the Chief Investment Officer for Gratis Capital. Thanks for joining us this morning, and we hope you enjoy the new format. We're doing a little bit of experimentation with video, so we hope you find this well received. Let's take a look at some market activity from last week. Last week was a bit of a roller coaster ride with many indexes trending in the negative. However, U.S. large cap index, the S&P 500, found a way to breach positive, roughly 90 basis points. International stocks were actually down 2.2%. They had been pretty strong up until this point relative to U.S. stocks. The other index that was positive for the week was commodities, showing another very strong week for the energy complex, with energy now trading Brent crude oil right around $90 per barrel. And then the more risky parts of the equity markets, the ARK Innovation ETF and the small cap index down 1% and call it 4%, roughly speaking. What was some of the catalysts for last week? Well, clearly, I think a lot of the activity from last week had to revolve around the Fed announcement that Jay Powell indicating that there was capacity or room for the Fed to not only raise interest rates, but also curtail the balance sheet at the same time. And I think this spooked market participants thinking that this might be too much tightening all at once. The good news, however, is that Q4 earnings season has kicked off over the last 2 weeks, and the message that we're receiving back from that has been broadly positive. Just for reference, Q4 earnings coming into January 1st of 2022 were supposed to be somewhere around 21%, and they're actually coming in based on the numbers we've received so far at about 24%. So a really strong earnings backdrop, which we think could be a nice offset to a lot of the macro headwinds. It should be noted, though, that there are dynamics in the bond market which are a little troubling. The difference between the 2-year and the 10-year bond yield is starting to decline, and that's what's also referred to as the yield curve is flattening. And the reason why I want to keep an eye on this is, as you'll see in one of the charts in the slide pack, is that this tends to have a very strong signaling effect that a recession could be on the horizon if that ratio goes negative. So we'll be keeping definitely an eye on that. But finally, I would mention that sentiment continues to be very supportive for future gains in the stock market, because as you'll see in the other chart showing the CNN Fear Greed Index, we're now registering fear in that index. That's something that we think is really a supportive backdrop to be investing against. Thanks for your time. We look forward to speaking to you again next week. Have a great day.
All price references and market forecasts correspond to the date of this recording. The information contained does not constitute research or recommendation from Gratis Capital to the listener. Gratis Capital is not providing any financial, economic, legal, accounting, or tax advice or recommendations in this podcast. In addition, the receipt of this podcast by any listener is not to be taken as constituting the giving of investment advice by Gratis Capital to that listener.